Based on the historical data and forecast, Bitcoin shows a sideways trend with fluctuations between 117,400 and 119,300. The RSI is hovering around 60 to 70, indicating neither strong overbought nor oversold conditions. The Bollinger Bands are widening, suggesting increasing volatility. Considering these factors, I recommend a combined strategy leveraging RSI and Bollinger Bands for optimal returns. First, we'll implement an RSI-based strategy. When the RSI drops below 30, indicating an oversold condition, we will enter a long position at 117,700 with a stop loss at 117,400. The target price will be 118,500. Next, we'll use the Bollinger Bands for confirmation. When the price touches the lower band, it indicates a potential buying opportunity. If the forecast price is 118,300, we can enter a long position at 118,300 with a stop loss at 117,900 and a target price of 118,500. Combining these two strategies, the most efficient portfolio will be to enter a long position at 117,700 with a stop loss at 117,400 and a target price of 118,500. This approach balances risk and reward, capitalizing on both technical indicators for enhanced profitability. Based on the historical data and forecast, Ethereum exhibits a strong upward trend. The price has consistently moved above the support price of $2,950 and approached the resistance price of $3,860. The RSI values have remained mostly above 70, indicating overbought conditions, but haven't triggered a significant reversal. The Bollinger Bands have also widened, suggesting increased volatility and a potential for further price movement. Given this analysis, I recommend a long position strategy. We will enter a long position at $3,860. The stop loss will be set at $3,790, just below the recent low, to protect against a potential pullback. The initial target price will be $3,900, aligning with the first forecast price. If the price reaches $3,900, we will move the stop loss to the entry price of $3,860 to secure profits and allow for further upside potential. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we'll consider entering a long position. Conversely, if the price touches the lower band of the Bollinger Bands, it could also signal a buying opportunity. However, given the current upward trend and the forecast data, the primary strategy remains the long position at $3,860 with a stop loss at $3,790 and an initial target price of $3,900. If the price continues to rise, we will adjust the target price to $3,960 and then $4,020, consistently tightening the stop loss to protect profits. This layered approach combines trend following with opportunistic entries based on RSI and Bollinger Bands, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, XRP shows a volatile trend with periods of strong upward momentum followed by corrections. The RSI consistently above 80 indicates overbought conditions, suggesting a potential pullback is likely. The Bollinger Bands confirm this, with the price nearing the upper band on several days. Considering this, my strategy combines RSI, Bollinger Bands, and support/resistance levels for optimal returns. I recommend a short position at $3.26. The stop loss should be set slightly above the upper Bollinger Band at $3.77 to protect against unexpected surges. The initial target price is the support level at $3.04, aiming for a quick profit from the anticipated correction. To further refine the strategy, I suggest a second entry point at $3.23 if the price bounces off the resistance and shows signs of a temporary consolidation. The stop loss for this entry would be $3.26, just above the entry price. The target price remains at $3.04. This dual entry approach allows for capitalizing on both the initial correction and potential rebounds, maximizing profit potential while minimizing risk. The portfolio is weighted 60% to the first short position and 40% to the second short position, reflecting the higher conviction in the initial overbought condition. Based on the historical data and forecast, BNB shows a strong uptrend. The price has consistently been above the support level of $784 and has tested the resistance level of $842. The RSI indicates that the asset has been fluctuating between oversold and overbought levels, but recently has been trending upwards, suggesting continued bullish momentum. The Bollinger Bands show that the price is currently near the upper band, indicating a potential for a pullback or consolidation. Considering this, I propose a strategy focusing on capitalizing on the uptrend while managing risk. My recommended strategy is a combination of RSI and Bollinger Bands. We will enter a long position when the RSI dips below 30 and the price touches the lower Bollinger Band. Based on the forecast, the price is expected to continue rising. I suggest entering a long position at $827. Set a stop loss at $815, just below the lower Bollinger Band to protect against a potential pullback. The initial target price will be $865, aligning with the forecast and the previous resistance level. If the price reaches $865, we can consider moving the stop loss to break even to secure profits and potentially extend the target price to $891, based on the highest forecast price. This combined strategy aims to leverage the uptrend while mitigating risk through strategic stop loss placement. Based on the historical data and forecast, Solana shows a fluctuating but generally upward trend. The RSI has been oscillating around the 60 to 80 range, indicating periods of both overbought and oversold conditions. The Bollinger Bands have widened recently, suggesting increased volatility and potential for price swings. Considering the support price of $182 and the forecast for $192 on July 29, 2025, I recommend a long position. We will enter a long position at $188, placing a stop loss at $182 to limit potential losses. The initial target price will be $192, aiming to capitalize on the forecasted upward movement. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI dips below 30, we will enter a long position at $150, with a stop loss at $146 and a target price of $163. Conversely, if the price touches the upper Bollinger Band, we will consider a short position at $203, with a stop loss at $203 and a target price of $197. The most efficient portfolio combines the long position based on the forecast and the RSI-based strategy, prioritizing the long position at $188 with a stop loss at $182 and a target price of $192. This approach balances potential gains with risk mitigation, aligning with a high returns investment strategy. Based on the historical data and forecast, Dogecoin shows an overall upward trend, although with some volatility. The RSI consistently fluctuates, recently dipping below 60, indicating a potential oversold condition. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. Considering the support price of $0.213 and the forecast prices, I recommend a long position. The entry price should be $0.232. The stop loss should be set just below the support level at $0.20 to mitigate potential losses. The initial target price is $0.257, aligning with the forecast high and a reasonable profit margin. To refine this strategy, we can incorporate RSI and Bollinger Band signals. When the RSI falls below 20, it's a strong buy signal. When the RSI is above 80, it's a sell signal. When the price touches the lower band, it's a buy signal, and when it touches the upper band, it's a sell signal. Given the recent RSI dip and the forecast, a long position at $0.232 with a stop loss at $0.20 is recommended. The first target price is $0.257, and if that is reached, we can move the stop loss to the entry price and set a second target price at $0.27 to capture further potential gains. This combined strategy balances trend following with momentum indicators for a high probability, high reward trade. Based on the historical data and forecast, TRON shows an overall upward trend. The RSI consistently fluctuates above 60, indicating bullish momentum, with recent values approaching overbought territory around 80. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. The forecast for the next week projects further price increases, reaching $0.335. Given these factors, I recommend a long position strategy. We will enter a long position at $0.323, coinciding with the current forecast price and recent closing price. A stop loss will be placed at $0.314, just above the established support level, to limit potential losses. Our target price will be $0.335, aligning with the forecast high for the week. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk. The RSI nearing overbought levels suggests a potential pullback, but the upward trend and forecast support continued buying pressure. The Bollinger Bands confirm this by showing the price nearing the upper band, indicating a potential breakout. This combined approach provides a high probability entry point, a well-defined stop loss, and a realistic target price for a profitable trade. Based on the historical data and forecast, Cardano shows an overall upward trend, although with some volatility. The RSI is currently at 70.9, indicating overbought conditions, but the forecast suggests continued upward momentum. The Bollinger Bands show that the price is nearing the upper band, which could signal a potential pullback. Combining these factors, I recommend a cautious long position. The entry price will be $0.843, coinciding with the first forecast price. The stop loss will be set at $0.814, just below the recent support level and the lowest price in the last 2 weeks. The initial target price will be $0.888, aligning with the upper Bollinger Band from July 21, 2025. To optimize the portfolio, I suggest a layered approach. After reaching the initial target price of $0.888, consider moving the stop loss to the entry price of $0.843 to protect profits. If the price continues to rise, set a second target price at $0.914, near the upper Bollinger Band from July 22, 2025. This strategy balances potential gains with risk management, capitalizing on the upward trend while mitigating losses from potential pullbacks. This approach provides flexibility to adjust to changing market conditions and maximize returns. Based on the historical data and forecast, Sui shows a generally upward trend, although with some volatility. The RSI indicates periods of overbought and oversold conditions, with recent values fluctuating around 60 to 70, suggesting moderate strength. The Bollinger Bands have been widening, indicating increasing volatility. The forecast for the next week predicts a continued upward trajectory, with prices potentially reaching $4.5. Therefore, I recommend a long position strategy targeting potential gains while managing risk with tight stop-loss orders. My strategy involves entering a long position at $4.28, coinciding with the initial forecast price and the recent upward momentum. A stop-loss order should be placed at $3.91, just below the recent low and below the lower Bollinger Band to limit potential losses. The target price is set at $4.5, aligning with the forecast high and providing a reasonable profit margin. If the RSI reaches 80, consider taking partial profits to secure gains. This strategy combines technical indicators and forecast data to maximize potential returns while minimizing risk, suitable for a high returns investment approach. Based on the historical data and forecast, Stellar shows a declining trend with periods of volatility. The RSI consistently above 80 indicates an overbought condition, suggesting a potential pullback. The Bollinger Bands show that the price has been fluctuating within a wide range, but the forecast indicates a potential upward movement. Considering these factors, I recommend a cautious long position strategy. We will enter a long position at $0.446, placing a stop-loss order at $0.419 to mitigate potential losses. The initial target price will be $0.481, aiming to capitalize on the predicted upward movement within the Bollinger Bands. To refine this strategy, we will incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, we will consider entering a long position at $0.419 with a stop loss at $0.384 and a target price at $0.463. If the RSI reaches 80, indicating an overbought condition, we will consider exiting the position or tightening our stop loss. This combined approach, blending Bollinger Bands and RSI signals, aims to maximize returns while managing risk effectively. The final portfolio will be 60% based on Bollinger Bands and 40% based on RSI. Based on the historical data and forecast, DeXe shows a slightly decreasing trend with the forecast prices indicating a potential further decline. The RSI consistently remains below the 50 mark, suggesting the asset is not strongly overbought. Considering the recent price action, I recommend a short position strategy. The entry price will be $7.26. The stop loss should be set at $7.49, just above the recent resistance level, to limit potential losses if the price unexpectedly reverses. The target price will be $7.02, aligning with the forecast price for August 4, 2025. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the lower band, which could indicate a potential bounce. However, given the overall downward trend and the forecast, I maintain the short position. The RSI is also in the oversold territory, which could suggest a temporary bounce before resuming the downward trend. Therefore, the combined strategy will be a short position with an entry price of $7.26, a stop loss at $7.49, and a target price of $7.02. This portfolio combines the RSI and Bollinger Bands to maximize returns. Based on the historical data and forecast, NEXO shows a slight downward trend. The price has been fluctuating between a support of $1.27 and a resistance of $1.35. The RSI indicates that the asset is approaching the overbought territory, with values ranging from 55.2 to 70.5. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential pullback. Given these factors, I recommend a cautious strategy focused on short-term gains. My strategy involves a combination of RSI and Bollinger Band signals. We will enter a short position at $1.33. The stop loss will be set at $1.35 to protect against a potential upward breakout. The target price will be $1.31, aiming to capitalize on a likely pullback towards the center of the Bollinger Bands and a potential RSI correction. This strategy aims to capture quick profits while minimizing risk, given the current market conditions. Based on the historical data and forecast, Curve DAO shows an upward trend with increasing forecast prices. The RSI consistently above 70 indicates an overbought condition, suggesting a potential pullback before further gains. The Bollinger Bands also show that the price has been near the upper band, reinforcing the overbought signal. Therefore, I recommend a cautious strategy focused on short-term gains. We will implement a strategy based on RSI, using the overbought level of 80 as a trigger to enter a short position. When the RSI drops below 70, we will initiate a long position, aiming to capitalize on pullbacks and subsequent upward momentum. Specifically, on August 4, 2025, with a forecast price of $1.18 and an RSI of approximately 70, I suggest entering a long position at $1.16. The stop loss should be set at $1.13, just below the forecast price and the lower Bollinger Band, to limit potential losses if the price reverses. The target price is set at $1.22, aligning with the upper Bollinger Band and providing a reasonable profit margin. This strategy combines RSI and Bollinger Band signals to optimize risk-reward ratio and capitalize on short-term price movements, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Bitcoin shows a sideways trend with fluctuations between 117,400 and 119,300. The RSI is hovering around 60 to 70, indicating neither strong overbought nor oversold conditions. The Bollinger Bands are widening, suggesting increasing volatility. Considering these factors, I recommend a combined strategy leveraging RSI and Bollinger Bands for optimal returns. First, we'll implement an RSI-based strategy. When the RSI drops below 30, indicating an oversold condition, we will enter a long position at 117,700 with a stop loss at 117,400. The target price will be 118,500. Next, we'll use the Bollinger Bands for confirmation. When the price touches the lower band, it indicates a potential buying opportunity. If the forecast price is 118,300, we can enter a long position at 118,300 with a stop loss at 117900 and a target price of 118,500. Combining these two strategies, the most efficient portfolio will be to enter a long position at 117,700 with a stop loss at 117400 and a target price of 118,500. This approach balances risk and reward, capitalizing on both technical indicators for enhanced profitability. Based on the historical data and forecast, PAX Gold shows a slight downward trend, particularly evident in the recent forecast prices. The RSI consistently fluctuates around the mid-range, with recent dips below 50, indicating weakening momentum. The Bollinger Bands show that the price is approaching the lower band, suggesting potential for a short-term decline. Therefore, I recommend a short selling strategy. Entry price should be $3,320. The stop loss should be set at $3,350 to protect against a potential reversal. The initial target price is $3,280, aligning with the lower Bollinger Band and the forecast price. To refine this strategy, I propose a tiered approach. If the price reaches $3,280, take partial profits and move the stop loss to the entry price of $3,320. If the price continues to decline, set the next target price at $3,250, based on the latest forecast. This portfolio combines a primary short position with dynamic stop loss and target adjustments to maximize potential returns while mitigating risk. The overall strategy aims to capitalize on the anticipated downward trend while incorporating flexibility to adapt to changing market conditions. Based on the historical data and forecast, Raydium shows an upward trend with periods of consolidation. The RSI consistently remains above 60, indicating a generally bullish sentiment, though nearing overbought territory recently. The Bollinger Bands have been widening, suggesting increased volatility and potential for price swings. Considering the support price of $3.02 and the forecast predicting prices around $3.28 to $3.34, a long position strategy is warranted. I recommend entering a long position at $3.1. Set a stop-loss order at $2.96 to limit potential losses if the price reverses. A reasonable target price would be $3.34, aiming to capitalize on the forecast price movement. To refine this strategy, I'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, consider entering a long position at the support price of $3.02 with a stop loss at $2.96 and a target of $3.34. Conversely, if the price touches the lower band of the Bollinger Bands, it suggests an oversold condition, presenting another buying opportunity at $2.48 with a stop loss at $2.42 and a target of $3.34. Combining these approaches, the most efficient portfolio would prioritize the long entry at $3.1 initially, with fallback options based on RSI and Bollinger Band signals for enhanced risk management and profit potential. Based on the historical data and forecast, TRON shows an overall upward trend. The RSI consistently fluctuates above 60, indicating bullish momentum, with recent values approaching overbought territory around 80. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. The forecast for the next week projects further price increases, reaching $0.335. Given these factors, I recommend a long position strategy. We will enter a long position at $0.323, coinciding with the current forecast price and recent closing price. A stop loss will be placed at $0.314, just above the established support level, to limit potential losses. Our target price will be $0.335, aligning with the forecast high for the week. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk. The RSI nearing overbought levels suggests a potential pullback, but the upward trend and forecast support continued buying pressure. The Bollinger Bands confirm this by showing the price nearing the upper band, indicating a potential breakout. This combined approach provides a high probability entry point, a well-defined stop loss, and a realistic target price for a profitable trade. Based on the historical data and forecast, Optimism shows a mixed trend with recent volatility. The RSI consistently fluctuating around 60 to 76, indicating neither strong overbought nor oversold conditions, suggests a sideways market with potential for short-term swings. The Bollinger Bands show the price has been oscillating within the bands, with the recent price approaching the upper band, indicating potential for a pullback. Considering the support price of 0.719 and the resistance of 0.805, I recommend a strategy that capitalizes on short-term fluctuations while managing risk. My proposed strategy is a combined approach utilizing RSI and Bollinger Bands. We will initiate a long position at $0.775, coinciding with the first forecast price and near the upper Bollinger Band. A stop loss will be placed at $0.741, just below the recent low and providing a buffer against immediate downside risk. The initial target price will be $0.81, aligning with the forecast price and just below the recent resistance. If the price moves beyond $0.81, we will adjust the target price to $0.846, the recent upper Bollinger Band. This combined approach leverages both technical indicators for optimal risk-reward ratio. Based on the historical data and forecast, Pendle shows an overall upward trend, with support consistently around $4.27 and resistance fluctuating around $4.87. The RSI indicates periods of both overbought and oversold conditions, but recently has been trending upwards. The Bollinger Bands show that the price has been approaching the upper band, suggesting a potential pullback. Combining these indicators, I propose a strategy focused on capitalizing on short-term pullbacks within the broader uptrend. My recommended strategy is to enter a long position at $4.56, coinciding with a slight dip and a potential bounce off the lower Bollinger Band. Place a stop-loss order at $4.27, just below the established support level, to limit potential losses. Set a target price at $4.78, aligning with the forecast price and just below the recent resistance. This strategy aims to capture a quick profit from a short-term upward movement while mitigating risk with a well-defined stop-loss. The RSI is currently around 59.1, which is not overbought, so there is room for price appreciation. This portfolio combines the RSI, Bollinger Bands, and support and resistance prices to achieve high returns. Based on the historical data and forecast, Conflux exhibits a volatile trend with a recent upward momentum. The RSI consistently fluctuates above 60, peaking near 93, indicating overbought conditions, but then retracing. The Bollinger Bands show significant expansion, suggesting increased price volatility. The forecast for the next week projects continued upward movement, with prices potentially reaching $0.233. Considering the current RSI near overbought levels and the forecast, I propose a strategy that combines RSI and Bollinger Bands. The strategy involves a buy position when the price touches the lower Bollinger Band and the RSI dips below 30. The entry price for this trade is $0.193. A stop-loss order should be placed just below the lower Bollinger Band at $0.188 to mitigate potential losses. The target price is set at the resistance level of $0.252, aiming for a substantial profit. If the RSI reaches 80, it indicates an overbought condition, and the position should be closed to avoid potential reversals. This combined strategy leverages both volatility and momentum indicators to maximize returns while managing risk effectively.